I remember learning to trade, and it felt like a huge, complicated world. Many people feel this way. They see complex charts and hear strange words. They think it is only for experts, but it does not have to be that way. Anyone can learn the basics of trading. The key is to start small. You must start with a clear plan. This is the story of my very first trade. I risked a small amount, just $10. I used a platform called Exness. I will show you exactly what happened step by step. This guide is for absolute beginners. The choice of a trading platform is important. It is your main tool. You need one that is easy to understand and not overwhelming. I chose Exness for this reason. The first practical step was to create an account. I went to the Exness website. There was a large button that said sign up. The system asked for my country of residence. It asked for my email address and a password. I filled in these details carefully. Use a real email address. You must verify it to activate the account. That confirmed my account and opened the personal area dashboard. I saw a real account option and a demo account option. My goal was to practice. I navigated to the demo tab. The platform prompted me to open a new demo account. For beginners, the standard account is usually best. It has no commissions, only a spread. The spread is the small difference between the buying price and the selling price. I selected standard, chose USD, and it credited a virtual balance of $10,000. With the demo account ready, I installed the Exness Trade app. I logged in and saw my $10,000 demo balance. I tapped each tab to learn what they do. Now it was time to place my first practice trade. The price seemed to be in a slight upward movement. I decided to practice placing a buy order. A new screen popped up, the order execution screen. It showed UR, USD, and the current buy price. The most important field, volume or lot size. On demo, it is easy to trade large sizes, but I set a very small volume, 0.01 lots. That is the smallest for most pairs, and a tiny fraction of the balance. Smart risk management. Next, safety nets. Stop loss to limit loss. Take profit to exit at target. A 1.1 risk to reward. After double-checking, I tapped confirm buy. My first demo trade was live. I could see entry, current price, and running PL. I let the trade run. After about 30 minutes, price hit take profit. A small virtual profit was added. The process was complete, start to finish exactly as planned. Understanding a price chart is fundamental. I set UR/USD to the 15-minute time frame. A green candle closes higher. A red candle closes lower for that period. A series of candles shows direction, up, down, or sideways. I added a 20-period simple moving average to smooth price data. My rule, above the MA suggests buying opportunities, below suggests selling. I saw price cross above the MA, then several higher closes, a logical buy signal. I was not chasing perfect entries. Indicators gauge probabilities, not certainties. False signals happen. That is why stop-loss protection is essential. Your strategy gives a reason to enter. Risk management protects you if it fails. For beginners, buy above the MA, sell below it, a clear visual starting point. After several successful demo trades, I felt ready. It was time to move to a real account. Verification required uploading my ID and proof of address, standard KYC. Approval arrived within hours. I deposited a small amount, $20. My first $10 risk would be significant but not catastrophic. I switched to the real account. The interface was identical. The balance was now my money. Most important rule, do not change your strategy or risk parameters. I opened your USD, added the 20-period MA, and waited for my setup. Price crossed above, a strong green candle formed. This was my signal. I took a deep breath, tapped buy, and entered the smallest volume, 0.01 lots. With an online calculator, I set stop loss to risk about $10, set take profit, and confirmed. My first real trade was on. I resisted the urge to close from fear or excitement. Monitoring the live trade was an exercise in emotional control. Practice helped. I had a logical plan and a capped maximum loss of $10. After about an hour, price hit my take profit, and a profit of around $10 was added. Winning felt great, but the experience was more valuable than the money. I proved I could plan, wait for a signal, execute with risk management, and stick to it. My crucial tip: document everything. Chart screenshot, date, pair, reason, entry, SLETP, and result. A journal lets you review decisions, identify what works, and spot recurring mistakes. Your next step, open a demo on a user-friendly platform like Exness. Do not deposit yet. Practice at least a week, place 10 to 20 demo trades, use a stop loss on every trade, and journal.